Since Japan's bonds are getting higher yields, and what does it mean to Indian markets actually? So the era, why are Japan yields are rising? The era of free money in Japan is effectively over due to three main factors. The Bank of Japan pivot. For the first time in over a decade, the Bank of Japan is aggressively raising. So here we can see the Bank of Japan is the 30-year bond yield is almost near to 30-year high. So near to 30-year high, almost like, so in 5 years it given returns like 441.49%. For the bonds like Japan bonds, that has been a very low level, low returns, that has been giving some massive returns. So that is not a good, that too in a bond yield. So that is not a good thing for markets, because Japan, like see, the Prime Minister Sane Takaichi has introduced a massive 122 trillion yen budget for 2026. This expansionary spending requires the government to issue more bonds, increasingly supply and pushing yields higher. See, the bonds and everything, I'll make a content on that, I'll make a video on that, how bonds will work, how the Indian markets will get affected if the interest rates, what is Fed income rate, what is FOMC, what is RBI monetary policy, what are interest rate actually, what happens if interest rates hikes, and what happens to FD, what happens to mutual funds, each and everything I'm going to explain in the weekend video. So there will be a video on weekend, especially on markets, what are markets, and I'll make a playlist of that. Now the carry trade. For years, global investors borrowed money in Japan at 0% interest, almost 0% interest, and invested in high growth markets. Like it's a free money, because you're taking from the government, you're taking from the Japan government and investing in high returns, like Indian markets and other markets. So you're not even paying a interest, but here you're getting returns. You are taking a loan with 0% interest, and you are doing business with the money, but still you are end up paying zero money to them. So using their capital, you are using the Japan yen rupee, the Japan yen, you are using the Japan's capital, Japan's amount, and you are investing in India. The investors also get money, but in return Japan government gave nothing, got nothing. So the impact on India was to pay back those yen loans, global funds may sell their Indian stocks. So that's the thing, Indian markets will get impacted. So because of because of the yield, and also because of the interest rates, the market got affected. So, and also this is the part why we have seen volatility in the Nifty lately. Now, once upon a time, there used to be a one word. When US sneezes, the world will catch a cold. In the same way, now if Japan sneezing, now the Japan is sneezing and the global liquidity catches a cold. That's the point here. So keep your medicines ready. That's what I'm gonna say. Keep your medications ready for that. Keep your money ready. Keep your mind ready for that. So there will be a huge volatility, and so many of them thought that 2025 is too much brutal for us, for markets and for other some external things. But 2026 is now completely, it is not even a 10 days now, we have heard so many bad news for the markets. The Trump news, or else the China meeting with Venezuela, after that Trump got triggered, then after that Japan yield getting higher interest. So this the impact. So the good news, only the good news in 2026 was Nifty reached made a all time high, but it got affected because of some geopolitical factors. So we'll see, some more updates may hit us. I'll let you know. And also the trend right now is sell on rise until the Nifty crosses 26,300 again. Caution in the name of the game. What do you think? Is this just a healthy correction, or is the Japan factor going to pull us down further? Money Japan's money was invested in Indian markets. They that had that the businessmen and other government officials or other person, Japan's officials got money from 0% interest. The companies or any other investment funds or any other thing, they took loans from the government with 0% interest and they got returns from the Indian government. Now the Japan's government is pulling their money back. The Japan's officials are pulling their money back from each and every country they have invested, because since last 10 years the Japan government got nothing apart from giving loan. So now they are pulling their money back. So this will definitely impact on Indian market, so be safe. Whether it is 26, only consider buying option or any other calls or anything only above 26,300. Unless and until, just wait for the levels to come. 26,000 mark is very important for us. May some way, if, we may see some of the bounce, but we can't say that market will hit again all time high. Yeah, if it is the Japan government has not pulled this thing, then we should have hit all time high, because the market has already observed the Japan Venezuela thing. So if you don't forget to hit the like button and subscribe for your daily market edge. I'll see you in the next one. Bye.